Is Bitcoin the future of money, or just a speculative bubble waiting to burst? This is a question that has been on the minds of many as Bitcoin continues to make headlines. Born from the digital world, Bitcoin's rise as an investment asset has been nothing short of meteoric, yet it's a journey marked with controversy. Some see it as a revolutionary financial tool, while others view it as a risky gamble. The truth? It's likely somewhere in between. But the Bitcoin conundrum doesn't stop there. Today, we also have Bitcoin ETFs in the mix. These financial products provide a different avenue for diving into the world of cryptocurrencies, fueling yet another debate. Should you buy Bitcoin directly, or should you invest in a Bitcoin ETF? In this video, we'll break down the pros and cons of buying Bitcoin directly versus investing in a Bitcoin ETF. So buckle up. So, you're considering buying Bitcoin, but what are the potential rewards and risks involved? Let's start with the advantages. First up is ownership. When you buy Bitcoin, you have direct control over your digital asset. You're the sole owner of a unique piece of digital code, stored in a digital wallet only you can access. And this ownership comes with the potential for higher returns. Bitcoin has had a meteoric rise since its inception in 2009, turning many early adopters into millionaires. Another advantage is decentralization. Unlike traditional currencies, Bitcoin is not controlled by any government or central bank. This means it's immune to government monetary policies and inflation, which can erode the value of traditional currencies. And lastly, the ease of use. With a multitude of platforms available, buying, selling, and trading Bitcoin is as simple as a few clicks or taps on your smartphone. But as with any investment, there are also downsides to consider. The biggest challenge is volatility. Bitcoin prices can fluctuate wildly in a matter of hours, making it a high-risk investment. If you're not comfortable with this level of volatility, Bitcoin might not be for you. Then there are security concerns. While your Bitcoin is stored in a digital wallet, it's not immune to hackers. If your wallet is compromised, there's little chance of recovering your lost Bitcoin. And let's not forget about liquidity. While Bitcoin is relatively easy to buy and sell, it might not be as liquid as traditional investments. If the market drops and everyone is trying to sell at once, you might find it difficult to sell your Bitcoin at the price you want. While buying Bitcoin directly has its advantages, it's not without its risks. Now let's turn our attention to Bitcoin ETFs. If buying Bitcoin directly seems like a daunting prospect, you might want to consider Bitcoin ETFs. But what exactly are they? Well, Bitcoin ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, much like individual stocks. They aim to track the price of Bitcoin, allowing investors to buy into the fund and indirectly invest in Bitcoin without having to acquire and store the digital currency themselves. Now, let's delve into the advantages of Bitcoin ETFs. First off, they offer diversification. Instead of putting all your eggs in one basket, that is, buying Bitcoin directly, you can spread your investment across a variety of assets within the ETF, reducing your risk. Second, Bitcoin ETFs are regulated and secure. They are subject to strict regulations by financial authorities, providing an additional layer of security. This can be a relief for those worried about the potential risks of holding Bitcoin directly. Third, there's the ease of trading. Bitcoin ETFs can be bought and sold like any other stock on a stock exchange. This means you can trade them during market hours and use traditional brokerage accounts. This is a far cry from the sometimes complex processes involved in buying and storing Bitcoin directly. Last but not least, Bitcoin ETFs have a lower entry barrier. You don't need to understand the intricacies of blockchain technology or digital wallets, nor do you need to worry about securely storing your Bitcoin. However, Bitcoin ETFs also have their downsides. For starters, you don't actually own the Bitcoin. Instead, you own shares in a fund that owns Bitcoin, which means you miss out on one of the key advantages of Bitcoin, the control and freedom of owning your own cryptocurrency. Additionally, Bitcoin ETFs come with fees. These are management fees charged by the fund and can eat into your profits. Finally, your investment's performance is tied to the market performance of Bitcoin. If Bitcoin's price falls, so will the value of your Bitcoin ETF investment. As you can see, Bitcoin ETFs offer a different set of advantages and disadvantages compared to buying Bitcoin directly. So, should you buy Bitcoin or invest in a Bitcoin ETF? The answer isn't as straightforward as you might think. Let's recap what we've discussed. Buying Bitcoin directly offers the potential for higher returns and the liberty of ownership. It brings the allure of decentralization, but also presents challenges with volatility and security. On the flip side, Bitcoin ETFs provide a diversified approach, a regulated environment, and an easier trading experience. But remember, you're trading off direct ownership and may encounter management fees. The verdict? It really depends on your investment goals, risk tolerance, and personal preferences. There's no one-size-fits-all answer. The key takeaway here is the importance of doing your homework before diving in. Consult with a financial advisor, assess your risk tolerance, and make an informed choice that suits your financial goals. Remember, whether you decide to buy Bitcoin directly or invest in a Bitcoin ETF, ensure it aligns with your financial goals and risk tolerance. Stay informed, stay safe, and stay tuned to www.BIGPriceDrops.com for more contrarian views on money and economics.